Hey traders, Raghee here, and in tonight's free video I'm going to kind of bring you into a conversation, a deep dive conversation that we had in this morning's chat room, just to give you an idea about how we manage trades, especially winners, to carry through. Let these trades have enough movement built into the trade management and the trailing stop to grab some monster pips. So this is a trade that actually only dates back to a setup that was last Tuesday, September 1st, and triggered Thursday, September 3rd, and then we actually ended up ratcheting and trailing a stop and realizing some pretty nice profit into today, September 8th. So really, we're talking about a market that had two trading sessions that were not holiday affected, and then today. So really, 3 trading days, just 3. So looking at the pound New Zealand, let's zoom in a bit on this setup, and I have some notes here to help you out. 38.55 was the conservative entry that we parked, hence the pending order, on the 1st of September. Now this is a limit buy order that we park. So let me talk a little bit about shelf life here, and this is something you should ask yourself too, about the shelf life of your trade. How long is the setup out there and waiting so you can do some analysis, understand the concepts of it, and then park the order? You know, you can't get this kind of shelf life out of 5, 15, 30, 60, 240-minute charts. Not necessarily. So one of the important aspects to being able to manage a 24-hour beast like the Forex market is, what is the shelf life of my trade? So here, we actually have about a 2-day shelf life. We set trades up typically between the hours of 8 a.m. and 10 Eastern every morning. So in those 2 hours, we do most of our homework and heavy lifting. Park using typically conditional orders like a limit order, and then leave them out there, modifying them as necessary. So again, what's the shelf life of your trade? You know, nothing's worse than getting a trade alert or a trade setup after the price has come and gone. This one gave, nearly 48 hours of heads up, and that's important to me, and I think that's important to most of us, because we don't just want a trade alert thrown at us without our being able to wrap our own heads around it. 38.55 was the entry. Again, about 48 hours shelf life. So this thing follows through pretty nicely, and let me give you some vertical lines here so you can kind of follow along. The 3rd was right here. Okay, so there's September the 3rd, and that's where it got triggered. So the first profit target, and all of these are laid out on the spreadsheet in the members area. And you can see the pound versus New Zealand dollar that I'm talking about right now, right here. So these are just some of the open trades that we're managing right now. So this first one right here is the setup that we're discussing in depth. So every one of these levels is highlighted when we build it. The entry, the point of validity stop loss where the trade is no longer valid, the first, second, and optional profit targets, and then also how many lots I am taking. Now I know this is a common question for those of you that are asking, how do I kind of follow along with Raghee? How do I know what she's doing? What levels is she doing something at, etc. Now here's what I'm going to tell you. You have to customize this to a little bit of your own wiring. This isn't a matter of just follow the leader blindly. If you're in the process of building an account and a trade going from the level of 38.55 to a profit target, an optional profit target of even just 40.20, something like that would give you 165 pips. Again, 38.55 to 40.20. Now at 40.20, you're going to go ahead and ratchet to a break even, and I highlight that under this BETS column here. And I typically will take half, a third, maybe a quarter of my position off the table. What I take off the table may be different than what you want to take off the table. If you have 1 or 2 lots, you might find yourself realizing a profit at 165 pips, which is not a shabby trade at all, and you'll find yourself out. Some of the limitations will be how many lots you initially enter with. I will always let you know what my size was. So once I realize a profit, then I will let you know how many lots are left. So upon that exit, I had 4 lots left. So at that moment, it was 4 lots left after taking 2 at 40.20. Then we hit the next profit target, which was the first. Now, if you decided not to take the optional profit target, it is optional after all, that's fine. The whole point of the optional profit target in front of the first is being able to ratchet to a break even. In this case, it would be 2.3845, limiting your downside from the POV stop loss, the validity stop loss, to more of a break even. Realize a profit and then don't let it turn into a loser. For me, that's going to more of a break even type stop. So 38.45 puts me just below the 38.50 major cycle level and gives me about 10 pips of play. Not a deal breaker. Even if that gets hit on the remaining 4 lots at that point, I've just taken 165 times 2 off the table. That's 330 pips. If for whatever reason my break even were to be hit, it's 4 lots at a 10 pip stop. So even then I have a 290 net on the trade. It's still definitely in the black. I haven't let a winner turn into a loser. So the next profit target is hit. This next profit target is 2.4175. Now again, if you have, depending on how many lots you took, you have the ability to take that off the table, go ahead and do so. That's a 320 pip gain. I did so through 1 lot. So because I'd already moved to a break even and realized a profit, rather than taking 2 lots off the table at 41.75, knowing that I still have this second profit target out there, I went ahead and took 1 lot off the table. So now I'm looking at 330 pips plus 320 pips exited across three lots, and I still have 3 lots to go. Then we hit this 44.90. So 44.90 comes, and that's this higher of the 2 red lines right there. All of these are outlined on the charts of the day and in my chart book and then on the spreadsheet. So now you take 44.90. So now what we have is 3 lots, right, that I had open, and I'm in from 2.3855. And what happens here is I have to make another decision. Again, so will you. You know the levels at which I'm going to make a decision at. What you want to do is completely up to you as far as your exit. Okay, so 2.4490 from the 38.55 actually is, as you can see here, 635 pips. So you can see I've kind of shown you the profits along the way. So at this point, I've taken 635 pips. I just took the 1 lot, and I have the existing exits, which cumulatively had 650 pips, right? So really, since Thursday, I just finished taking 1,285 pips off the table across 4 lots. And here's the part I really want to emphasize. After hitting the optional 40-20, I was absolutely limiting my downside. By moving to a break even, I wasn't smothering the trade. And this is something that a lot of trend traders don't know how to do. So forget the 1285. That's awesome. And I still have 2 lots open. Okay? I still have 2 lots open. So if we punch up through the 245 handle, I can continue riding this trend. No reason for me not to. All I'm risking at this moment is house money. That's it. My capital is completely out of harm's way. So I can ratchet to something a little bit more aggressive, and you can see here now, I've got 2 lots left, and I've got a break even trailing stop column here. This is now a trailing stop at 41.70. So we have a saying in the chat room, which is, show me your stop loss, and I will show you your P&L. So at this point, that's my stop loss. In fact, it's a trailing stop. I've trailed now, locked in 315 pips. Worst case scenario, that's where I get stopped out at a 315 pip gain across 2 lots. That gives me 630 pips. So if that's what happens, I know pretty much worst case scenario, I'm looking at 1,285 pips plus 630 for a total of 1,915 pips. Now, what if it keeps going? I could trail my stop again and again and again. And that's how you can get those monster trend trades and follow a trend for not just 3 or 4 days, but sometimes 2, 3, and 4 weeks. And let me show you a little bit about how we do that, because this is a big part of how we're able to pick these numbers. Like, Rocky, where are these numbers coming from? Support and resistance, what I endearingly call breadcrumbs, is a big part of it. Looking at the chart and figuring out where the markets had trouble ascending through. But a big part of it, kind of what I endearingly call my secret weapon, is a tool called the price movement ranges. So here we are within the price movement ranges, the volatility analysis. I'm going to jump into this pound versus New Zealand dollar and show you a little bit about the behavior of this pair. Every day, this pair is capable of moving. This accounts for about 68% probability. Okay, not about, it accounts for 68% probability. So what I'm seeing is right around 2/3 of the historical likelihood of price movement. Of course, that 1/3 is where those extreme days that would be north of 350 pips reside. Do those days happen? Absolutely. But I know I have a fairly decent minimum. So as we go into a major active session like tomorrow with the RBNZ and some UK data, am I going to be expecting this market to move about 350 pips? Absolutely. So I know if I want to stay in the trade, I don't want the trade to turn into a loser. I don't want to smother it. So I want to have a reasonable amount of risk, and reasonable is defined by what? How much does this pair need to move? Big dog, big yard. Pretty big dog, right? So I'm going to ask myself, what does 350 pips of volatility mean? Where would that land me if they all headed south? And is that a reasonable enough amount of movement for me to give the pair? And two, most importantly, not end up with a loser. And again, this means, can I stay away from getting through, say, 38.45? That's my break even. And where can my trailing be? It really shouldn't be much closer than about 350 pips from tomorrow's high, or from the current high, to account for the volatility. And that's how we are able to, one, manage, and two, not smother these trend follows. So I really wanted to give you all a deep dive. I think it's really important. If you take some of these lessons that I've imparted to you and apply them to your own trend follows, I really believe they're going to be a huge difference maker for you. Okay, so I hope this has been helpful. A really big deep dive on how I manage trades, and please consider that when you're trailing your next stop, and how you're managing your next winner and preventing your capital from being on the line and only being in that great place where we love to be, which is risking house money, otherwise known as unrealized profits. All right, so be good to one another, and I'll see you in the next update.